And once again, gold is trading in the same range what we have seen in last couple of days. And again, it has achieved the highs which it has seen yesterday, 1886.5 levels. Likewise, US crude has also seen 79 levels. So now what to expect? Is it going to break, or we can see a rise here from here? Which position you should take in order to profit today? We will see with the help of charts and indicators. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon. Remember, this is the second analysis for the day. Those who had watched the morning analysis definitely would have profited. So do watch that, also will be released with the Isha session. Let's start first to look into gold, followed with crude oil WTI. Do watch till the end. Now look at the hourly chart. See, double top is done here after drop. It is retraced to the same levels and failing to break, it is again trying to trade with a drop. At the same time, we did see that so far it is trying to trade in this channel. After a sharp drop here, it is trying to retrace a bit. Now remember, one thing is for sure, breaking 1872, 1867 and 60, these three levels, you can expect that it is going to drop, and below which we can see a sharper drop in gold. However, right now, till the time it trades in between this zone, do not consider this as bearish. Till the time for the day it trades about 1870, do not consider it as bearish. Now look at the hourly chart. Now see, on the hourly charts, you can see 1880, which was a stronger resistance, is now going to be the support. At the same time, 1875. So I will recommend you to sell only below 1875 levels, where you can expect 1870 as the first target, and below that 1867, 1860 levels are going to come to the rescue until 1860, and do not consider this as bearish, and probably it can bounce back achieving 1860 levels. This is also very much possible. So you can sell at 1875 and keep a trailing stop loss, so that in case of a reversal your trade closes in profit. This is very clear here. Now look at the hourly charts once again. See, the highs here 1886.5, and hence 1885, 86.5 is a good level for you to buy, because beyond that we will see it hitting 1891 and 1895 levels. Definitely these levels are going to be a good resistance. Now look, if you look at the hourly chart, the Bollinger Band widths have narrowed a bit, and probably it may give you sharper candles so that the width can expand. Also on the downside, 75 is going to be a very good support here. Now look at the directional movement is moderately bullish here. The stochastic, which was overbought, is now looking downwards. The MACD is in green and it is trying to converge. RSI is also looking down, with trading with a slight bearishness here. Now look at the 2-hour chart. Similar observation on the 2-hour charts as well. See, this is the retracement here, forming double top. It is trying to trade with a drop. In fact, below 1880 levels, you can expect 1870, 775, and below that a further drop can be seen. So those who want to risk a bit can sell at 1880 itself, but then you have to remain cautious. Directional movement is with trading with modest bullish bias. The stochastic is seen near to overbought levels and now looking downwards. The MACD is in green, trying to converge a bit. RSI is also trading flat. Now look at the 3-hour and similar observation on the 3-hour charts. Now see the formation here: rise, retracement, same candles, rise, couple of red candles, rise, red candle, rise, red candles, couple of, then rise and couple of red candles. So it is just trying to limit its movement within this zone itself before it looks over to a break. Now see, the directional movement is moderately bullish. Stochastic is near to overbought levels. The MACD is in green, trading with little divergence. And if you look at the RSI, this is trading flat here. And if you look at 4-hour, similar observation, similar formation here. Directional movement is bearish, trying to cross over. Stochastic is seen rising. The MACD is in green, trading with little divergence here, and see, this crossover has happened at bottom. It is just trading with modest bullish bias here. RSI is also trading flat here, and similarly, if you look at the daily chart, now look at the daily chart. Now see, on the daily charts, first thing is higher lows are seen. Second is higher highs. You can see previous 3 candles consistently giving higher highs, and this time the candle is fallen shy of creating achieving higher highs, but has reversed from double top levels, and hence these levels needs to be break. Then definitely 1891 levels, 1890, 91 levels could be seen there. On the downside, now see this, on the downside 1875, once it breaks, still 1870, 1867, and below that it can try to give a good drop. So you have to be watchful here. Still this formation is still indicating that there could be a little drop, but then you have to be watchful and alert till 1860. Do not consider this bearish. Directional movement moderately bearish, stochastic oversold, and that is why we can see a little greenery there. And the MACD is divergent and bullish, bearish trying to converge here, RSI trading flat. So we have seen the charts, we have seen the indicators. Considering you can sell at 1875 levels, but then 1870, 1867, and then 1860 levels are going to be the support levels on the downside. Till 1860, be extremely careful as it can reverse again, achieving those levels, and should not be considered bearish till then. On the upside, you can buy at 1886.5. Beyond that, 1890-91 levels first target, then 1895, and beyond that we may see it hitting 1900. Remember, I had told you several times in my previous analysis, till 1920 I will not consider this as bullish for near term. At the same time, one main thing to observe here, that if you want to risk a little, you can sell at 1880, but then remember 1876-75 levels should be very good support, should act as a very good support here. Hence, you can sell at 1880, but be cautious and alert. Take your trades accordingly. Trade with the stop loss, trade with the trailing stop loss. Now, let's have a look at crude oil WTI. Now, see, interestingly, WTI today achieved 79 levels, 78.8, 79 was the good resistance zone. It failed to break past 79, has reversed since then. Now, see, again, 78.4 levels coming to the support here. I told you, once it drops below 78.4, you can again expect 77.8 and 77.4. Now, only and only if you see oil trading below 77.4, you can confirm that we can see further bearishness on the downside. So possibly you can sell at 78.2 levels. You can expect here we can see 77.8 and 77.4 as the next support, and below that a further drop can be seen. Now see, directional movement crossing over for a sell entry here, stochastic dropping there. And look at the MACD, this is divergent and bearish. It is looking downwards on the early charts. RSI is also looking down here. Now look at 2-hour charts. On the 2-hour charts, likewise 78.8, giving it a very strong support. Try to breach till 70, but 79, but fail to breach past. Now you can see these candles. So rather I will say sell at 78 itself, and then you can expect 78.4, 77.4, and below 77.4 further drop can be seen there. Now 77.4 is going to be an extremely good support for the day. Directional movement crossing over for the bearish move, stochastic dropping. The MACD is divergent and bearish. It is crossed over. It is looking downwards. RSI is also looking downwards here. And if you look at 3-hour, likewise on the 3-hour charts, two symmetrical candles and one breakout candle. It is trying to trade with little more bearishness. Yes, you can sell at 78.2 itself, but then expect 77.8, 77.4. Very good support, and only below that you can expect it to trade further bearish. 77 levels is the next support level on the downside. Directional movement is bullish, trying to converge. Stochastic has seen overbought levels and now trying to trade with a drop. The MACD is trying to converge, crossover for a sell entry, and the RSI is looking downwards here, which is a bearish indication. Now look at 4-hour chart. On the 4-hour charts, it may try to create a symmetrical candle. That is, see the previous candle, a tail and a smaller body, and this candle may again give you a tail and then the similar body, and hence you should be cautious here till 78.2. In fact, see, 77.4 is the only level below which it should be a good selling level. It should be a real selling level. However, if you want to book a little, you can sell at 78.2, but then 78, 77.8, and then 77.4 will come into picture. And till 77.4, it is a little risky, but you can sell here. Directional movement is bullish, trying to converge. Stochastic was trading overbought and now looking forward to a vertical drop here. And if you look at the MACD, this is in green, trying to converge, crossover for a sell. RSI is also looking downwards here. Now look at the daily. On the daily charts also similar formation, achieving higher highs. It is trying to trade with a drop. If it possibly it can give you lower lows here, which might take it till towards 77 levels. The directional movement is moderately bullish. Stochastic rising to overbought levels. The MACD trying to converge, crossover for a buy, and the RSI is trading flat here. Considering this, I will recommend you to buy at 78.8 levels and sell at 78.2. The levels I am recommending are precisely the same what we had seen earlier in the day, and below 78.2 now you can expect 78 and 77.8. Till 77.8 we have to remain careful and cautious. Below that you can expect 77.4, the next and strongest support. And if it drops below 77.4, further bearishness will take it till towards 77, 76.5, 76 level. Take your trades accordingly. Trade with a stop loss, trade with a trailing stop loss. And above 78.8, 79, 79.2, very cautious till 79.2, and beyond that you can expect 79.5 and 80 levels. Trade with a stop loss, trade with a trailing stop loss. Do not forget to like, share, subscribe, and comment. Do not forget to press the bell icon. Thank you very much. Have a great profitable trading day ahead. Thank you.